2030424. 0.75. QQQSPY15. 22104.30%. QQQ670SPY716. SPY71210.45%. QQQ24670.68. A50. 7700080000. 45% 35% 20%. /CH. N. Good morning, and welcome to our market analysis. Today's markets are presenting a complex and somewhat fragmented picture. Let's start with a quick snapshot of the key data. Bitcoin is currently hovering around $78,357.40, showing a marginal dip of 0.02%, while Ethereum is also down slightly by 0.14% at $2,309.24. In the US equity markets, the Nasdaq 100 ETF, QQQ, and the S&P 500 ETF, SPY, are holding firm at elevated levels, at $674.15 and $720.65 respectively. Nvidia trades at $198.45 and Tesla at $390.82. The A-share market in Asia, however, shows clear divergence. The Shanghai Composite Index closed at 4,112.16 points, up a modest 0.11%. The SSE 50 Index performed strongly, gaining 0.61% to 2,985.50 points, but the Chinext Index lagged, falling 0.27% to 3,677.15 points. Looking at macro indicators, the 10-year U.S. Treasury yield has pulled back to 4.38%, the VIX index remains at a moderate 16.99, and the U.S. dollar index, DXY, is at a lower level of 98.21. In commodities, Brent crude is at $108.17, WTI crude at $101.94, and COMEX gold is priced at $4,629.90. Overall, the market is exhibiting a risk-on bias amidst differentiation. U.S. broad market indices are maintaining high levels, and the subdued VIX suggests that risk appetite has not significantly contracted. However, the clear divergence within A-shares, with the SSE 50 outperforming the Chinext, indicates a rotation of capital between sectors rather than a systemic withdrawal. Our primary direction for today is projected to be volatile with an upward bias, with a probability of 0.68. This outlook is primarily boosted by increasing expectations of a Federal Reserve rate cut and the anticipated resolution of the U.S. debt ceiling issue. Nevertheless, the impending release of tonight's non-farm payrolls data introduces significant uncertainty, limiting the potential for a substantial rally. Regarding capital flows, we're observing a core shift from high-valuation growth stocks towards traditional value sectors and energy. In the A-share market, northbound capital saw a record net inflow of 150 billion yuan in April, primarily targeting consumer and financial sectors. Concurrently, U.S. energy stocks are maintaining strength, supported by EU sanctions. Breaking down the macro drivers further, the probability of a Fed rate cut in September has risen to 70%, with the 10-year U.S. Treasury yield retreating from 4.45% to 4.38%. This clearly signals a positive catalyst for risk assets, with a bullish probability of 0.75. The DXY dollar index, trading at 98.21, is at a lower level, supporting emerging market assets and export-oriented sectors, with a bullish probability of 0.65. On the inflation front, WTI crude at $101.94 remains elevated, and gold prices suggest the market is still pricing in inflation stickiness, presenting a neutral to slightly bullish outlook. Geopolitical risks are somewhat balanced. The temporary ceasefire between Israel and Hamas offsets the EU's 15th round of sanctions against Russia, leading to an overall reduction in risk premium. Turning to core assets, U.S. equities are expected to be volatile with an upward bias, with a 0.68 probability. Rate cut expectations and the debt ceiling resolution are key supports, but non-farm data could trigger intraday volatility. QQQ and SPY are at high levels, and their key support zones should be monitored. A shares are primarily foreign capital driven, with a neutral to slightly bullish sentiment. The SSE 50 and CSI 300 are benefiting from northbound inflows, but growth stocks face pressure, with the Shanghai Composite's 4,100-point level serving as core support. For Bitcoin, despite favorable macro conditions, a $120 million net outflow from IBIT and MicroStrategy's sale of 2,000 BTC are exerting real pressure, limiting short-term upside. The direction is likely to be volatile. In commodities, the energy sector benefits.